Good weekend, all. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up, and this wrap-up is the weekend edition for October 11th, Saturday, 2025. By now, you've been, I hope, keeping up with the world events. The first thing is, let's applaud President Trump. He's going to fly to the Mideast. He'll be one of many presidents or prime ministers that will be representing their countries at the signing. Finally, it looks like a peace deal. Can it hold? That's going to be the key part of it. If it can, this is just phenomenal for everybody involved. Now, the other news wasn't so good that we've seen. All right. First, you're not going to get any government data because it is Columbus Day and the government's still shut down. The good news is the president has found a way to pay our troops. I don't know where the money's coming from, but they magically found it. So the troops will be paid, and I think that's great news. And that, by the way, takes some of the pressure that the Democrats were putting on the president off. At some point here, they got to start talking, so we'll see what goes on. The bad news. China, and I mentioned this last week, China shut off rare earths and other critical minerals that we in the U.S. use for defense and technology. It's not just us. They sent letters out to country upon country. Why? They're fed up with the tariffs. And this is their defense play, if you will, that they can make on it. So how do you get over this? Because it is a real problem. I mean, China just wants to produce. They subsidize the losses of their production to build the economy, people getting money and salaries and so on. So if the goods lose money on one way, they come up with a reason that they're doing it another. It's not a free democracy. It's a communist country. And it's done completely different. And the problem is where they drop these goods, whatever they are, cars, whatever the heck it is going to be, they can overwhelm the local markets. And then you get the production shut down. Then you find that you're at their mercy for those goods, but your economy starts teetering. That's not good. President Trump, in response to that, came out and said, I'm slapping 100% tariffs on everything from China, in addition to the regular tariff. And of course, China, everybody's reacting, and this thing's got to tame itself down. This did not just happen. China had to plan this out. I think they saw the weakness that the world had to their rare earths. I think they played their hand as long as they felt it good. They played with Trump, and Trump kept saying, oh, I'm going to talk to them about buying soybeans. They're not buying your soybeans right now. They might later. Maybe that's part of the deal down the road. But first, the two presidents got to start talking. The London Metal Exchange, pay attention to what's going on in silver. Do you remember me telling you the squeeze play that was happening at that exchange in copper? Well, it's now playing itself out in the silver market. So if you're a silver trader, take a look at what I've written here. A lot more is in my newsletter, going to be in it, especially this week, and I'll cover that in a lot more detail there and give you some heads up with it. All right. So the one thing we know is the stock market let go. And you could see the big breaks that have happened here. You then can see Amazon down $11, Dell down $5, oil down $14. There's no getting away from it. If you're on the long side of the market, far and few between, like XLP was up, AMC, who cares? They were up 2 cents. Gold was certainly up. GDX was up, not copper. Industrials are going to take a hit on news like that. The silver up another 70 cents. So you want to pay attention to all these. But this is where that volatility is going to come in. This is the most volatile month of the year historically. Doesn't mean it had to be. In very frank news. Remember, we were supposed to have a weak August and a weak September. Those didn't happen. So now you are getting that volatility, and you should get your shopping list ready of markets that have deep breaks, and those are the ones you might want to own. Since there's a squeeze play in silver, you can see what's going on. It's rocking and rolling. The London Metal Exchange, for the first time ever on that exchange, saw silver cross $50. That's pretty big, and you can see what's going on through there. Higher lows, higher highs, well over and has been over the 18-week average of closes ever since right here in April, and it's just kept running ever since then, going on now. So the poor man's gold is finally on fire. And I'm sure there's a lot of happy people with that. But you are 3 weeks over the upper Bollinger Band. You don't stay over that band forever. 5% of the time it stays over it. It's an unusual situation. We saw the same thing in copper, and it went for weeks, not 3, longer. So you can do that. I've seen it go 7, 8. So just be aware of that. Liquidity services. Look at how this market's now tanking down. So you're back to the 100-day average. Most likely, if selling pressure keeps coming on the market, $22 could be a target there. When you look at ENSG, now this is a little different type of market. This is the nursing services. So the buys in this, yeah, the market's still embedded. The pros will probably try to pick this up if everything around it gets cheapo. Cleveland Cliffs went up to the 100-day average, 100-week average, and the upper Bollinger Band, and is pulling back in the market. Rocket Mortgage. Now, you want to keep your eye here. The 10-year notes got obviously a pretty strong bid, and the yield started falling. Are we going to go under 4% this week is the big question. And if it does, how low do we go? And then maybe that spurs on the demand for mortgages. We'll see. This market has pulled back to the 18-day average, and that's always of interest to me. Same in Home Depot. You're down to these key areas. The problem is, how does all this trade war between the two giants, China and the U.S., work out? You know, it's one thing when the U.S. goes after Thailand. It's another when it goes after smaller countries. It's a whole different world when you go after China. They're a big economy, and that's where the titans are fighting it out. So that's been weighing, I think, to a degree on this market. Uber finally gets hit, down 3%, as you can see on the week. Now does it find support at the 18-week average of closes? Rivian, probably going to pull down more. Wouldn't surprise me if you're back into the $11.75, $12 mark at some point here. We'll see if things come down with the market as a whole. XLI, huge reversal week. I mean, a monster one, key reversal week, in fact. Lost its momentum, pointing down. So this is the week where you want to measure what's going on, how bad do things get, and do you have a shopping list that you might want to pick up? I'd still stay away from the energies. You've been hearing me say that over and over in my futures and in here. I'm still in the bear camp. I was by myself. I'm not there anymore. Others are there. The dollar's still strong. So what the dollar's proven is when all this comes unglued in the world and you get these trade wars, where do people run? They run to the dollar. As much as you hear that, unfortunately, we're not biting the bullet and spending less money, we're not addressing the budget, well, we're trying with the government shutdown, but addressing it means really cutting back on the spending. It's got to be done in some manner. I don't know how, but that's got to be done eventually. The gold rocketing in times of uncertainty, and that's what you're getting. Look at how many weeks in a row you're over the upper Bollinger Band. So normally 7's about it. You have an unusual situation. You don't go short at Bollinger Bands. You've heard me say that hundreds of times, and that's what's going on. People that are trying to sell this market, they're fueling the fire. Copper trying to pull back now into the Bollinger Band. And this is what I was saying. You can run over it, and then you come right back eventually. Sorry about that. So that's where you're at in these markets. You want to be cautious. This is a week where you want to keep up with what I'm doing. If you haven't had my research, this is the time to get it. You can either click up here if you're watching off our website. If you're watching it on YouTube, you'll see an icon here. Give that a click. That's how you get involved with it. And I think this is where now this gets to be real interesting, because corrections we haven't seen in a long time, and one's upon us right now. How long it goes, don't know. How far it goes, don't know. But it's here. And that's what we want, and that I do know. I'm Ira. You have yourself a great weekend. Watch the other videos. I'll catch up with you Monday morning in the Morning Flash. Take care.